Gold prices have been on a tear so far this year, rallying nearly 15% amid safe haven demand. In early trade on Wednesday, gold MCX futures hit Rs 55,000 per 10 gram and was just a stone's throw away from Rs 56,200, its all-time high level touched in August 2020. Internationally too, the bullion has rallied and is up 12% so far this year, as investors seek a store of value amid the threat of an inflationary shock to the global economy following a spike in crude oil prices. Holdings in gold-backed ETFs have climbed to their highest since March 2021, with inflows of about 152 tons this year, data compiled by Bloomberg showed. So in this video, let's decode why the gold prices are rallying, is there more room left for the upside, and what would be the right level for investors to add bullion to their portfolio. Alright, sir, what would you say is the reason behind the stupendous rally in gold prices that we have seen?
From the time that the Ukraine-Russia issue has kind of come into to play, what we've seen is that the safe haven demand for gold has significantly increased, right? And that has seen gold prices being propelled to the level that we have seen currently. Now, this is what is happening as a reactionary, impact of a geopolitical issue like that. But we've seen in history, if we were to go back to history and see that such geopolitical issues generally have a very, large impact on prices significantly in the near term, but they tend to also correct over a period of time. But this time around, in my opinion, gold prices are not just a reaction to the geopolitical factors, correct? What is actually impacting gold is this, that despite, if you were to notice, and let's go back to a period before the whole Ukraine issue came into foray, gold was still in a very strong position and actually was tending to rally a little bit. Okay, it kept on holding to its key positions. The reason was very simple. That despite the fact that Fed was aggressively talking about rate hikes, was talking about removing the liquidity from the market, which traditionally we've seen has been negative for gold, it was still building up primarily because of the fact of inflation. Inflation is a core theme which is going to play a very significant role in the gold pricing going forward also. Right, we've seen inflation at almost a 40-year high, and the current situation that we're seeing in Ukraine and Russia is only going to complicate things more, because if you see, apart from base metals, energy, everything else has kind of spiked. We've seen a super cycle in commodity prices. So this will further translate into a higher rate of inflationary growth happening over a period of time. Nothing happens instantly, but a trickle-down impact happens slowly. And what will happen because of that? Inflation further grow. The best hedge against inflation is going to be something like gold. Second, would a US Fed actually go ahead and be aggressive with the rate hikes given the scenario that they are seeing? I really don't think so. You also have the Fed chairman coming and saying that they're going to have a very balanced approach. They're going to look at how things are panning out, how it impacts growth in US to decide whether rate hikes beyond 25 basis point is possible or not. Before this, it was a foregone conclusion that 50 basis point is a given. But now we are already talking about 25 basis point. Now the number of events that would happen will be something which we'll have to wait and see. Now, so with Fed and central banks taking a cautious approach, because they want to be pro-growth and not so much about controlling inflation. But what will happen is that the inflation will continue to exist and the growth could, decelerate a little bit. So we are actually staged for a beautiful stage of stagflation globally, and which doesn't say too well for global markets. And in that phase, where will the money move? The money will move to safe haven assets like gold.
Do you think it would be safe to assume that gold prices can not only revisit their all-time high levels, but can also make new highs?
So my sense is very clear. I think everybody was looking at the 2150 kind of levels per troy ounce for gold. My sense is that level is going to be taken out. But would it happen significantly now with the whole Ukraine-Russia issue? I don't think so. What we would see is that a little bit of correction would come, gold would consolidate. But then all the other factors that we talked about, which would make it seem that the factors which are positive for growth are more long-lasting, will propel gold prices beyond 2150 also, in my opinion. I am not surprised if we see levels of 2200 and 2250 by the end of this year also. But I think as investors, we'll get opportunities to get entry points slightly at a lower price. But if somebody is on a long-term basis, it really doesn't need to time the market. They could enter at little bit of correction also, because the long-term target is much higher than the current.
Would you say that domestic investors should wait for some correction before they add gold to their portfolio, or is current level also a decent one for them?
So I would be more comfortable entering gold prices around 53,000 and sub 53,000 levels. The reason I'm saying that, am I expecting instant correction? I don't think so. But my sense is that a lot of this ratcheting up of the prices has happened because of the rhetoric around the whole geopolitical situation we have seen. Some little bit of sense would happen, and that would cause the prices to correct a little bit. And that will be a brilliant opportunity for long-term investors to enter gold. I might want to add a caveat here is that when we look at gold investment, it has to be on a long-term basis. And that is why I'm not excited about seeing what are the number of futures built up in CFTC data. I look at what is the flow of investment into SPDR gold ETF fund, because when somebody puts money there, they're looking at more than a year for sure. So to that extent, yes, I think it makes sense to enter anything below 53,000 levels.